Hey everyone, welcome back to Corporate Decoder. Today we're diving into an 8K filing from OGE Energy Corp, and let's just say this report involves a little more than just tweaking a few numbers. It is about building the future. Literally, stay tuned as we break down what this means for the company and its investors. And hey, before we get bogged down in the grid, if you love getting these corporate insights explained simply, make sure you are subscribed and click that notification bell. Also, we have a lively Discord community where you can chat with us and other viewers about these filings. The link is in the description below. This filing is all about a recent decision from the Oklahoma Corporation Commission, or OC for short. Think of them as the folks who give the green light for big energy projects in Oklahoma. And on the 13th of November 2025, they gave a pretty important thumbs up to OGE Energy's subsidiary, OGSide, a big electric company that serves over 900,000 customers in Oklahoma and western Arkansas. So OGE Energy is the parent company, and OGE Civi is the actual utility that powers homes and businesses. This report is mainly about a decision OGE Future E received that will shape its future. The big news is that OGE Findy got the go, ahead, or pre-approval to build 2 new natural gas power plants. These are combustion turbines, and together they will be able to produce a significant amount of electricity, 448 megawatts. That is a pretty substantial addition of power generation capacity. The OCC looked at OGE Cindy's request and agreed that these new plants are needed. They are planning to get these up and running by the end of 2029. Now, one small hiccup here is that the Commission didn't approve including the cost of building these plants in what is called construction work in progress on their books right now. Can't charge customers for them before they are actually producing power. However, they did approve that once the plants are online, the cost can be recovered through something called a rider, which is basically a special charge on customer bills. They also approved some agreements to buy power called capacity purchase agreements, but conveniently didn't allow OGE CID to make a profit on those specific agreements. This approval means OGE Energy is shaking up its spending plans. They've updated their 5-year forecast for how much money they plan to invest, and these new power plants are now a big part of that. They've even extended that plan all the way out to 2030. They plan to pay for these new investments by borrowing money and also by selling more stock. And they want to make sure they can still keep a strong credit rating. Looking ahead, OGE Energy is aiming for steady growth. They have a target for their earnings per S-share, which is how much profit a company makes for each share of stock it has, to grow between 5 and 7% each year, and they're aiming for the higher end of that range until 2028. Now, let's talk about where all this money is going. OGE Energy has laid out how much they expect to spend on different projects from 2026 all the way to 2030. This is their roadmap for investment over the next few years. They've got a significant amount, about $1.39 billion, allocated for transmission lines. These are the massive power lines that carry electricity from where it is generated to where it is used. Investing here is crucial for a stable grid. A huge chunk, nearly $3.7 billion, is marked for what they call Oklahoma distribution. This means upgrading and expanding the network of wires and equipment within Oklahoma that delivers electricity directly to homes and businesses. This kind of investment is usually driven by growth in customer numbers and the need to keep the local grid reliable. They're also putting aside about $125 million for their distribution network in Arkansas. This is for serving customers in the western part of that state. About $810 million is set aside for generation reliability. This sounds like money going into making sure their existing power plants are running smoothly and efficiently. It's about keeping the lights on without any surprises. Here is where the new power plants come into play. They've allocated about $570 million specifically for what they call generation capacity projects. This includes the 2 new natural gas turbines we talked about earlier. This is a clear signal of their strategy to boost their power generation capabilities. Interestingly, the majority of this investment in new capacity seems to be concentrated in the earlier planned years, with less in 2029 and none in 2030. For this specific category, which makes sense as the new plants are scheduled to be ready by the end of 2029. They are also investing around $695 million in technology, their overall fleet of vehicles and equipment, and their facilities. This covers a broad range of things from upgrading its systems to maintaining buildings and ensuring their operational infrastructure is modern and efficient. When you add it all up, OGE Energy is planning to spend a massive $7.285 billion over the next 5 years. That is a huge commitment to investing in their infrastructure and future power generation. Now, like most companies, OG Energy is also including forward-looking statements. This means they are making educated guesses about the future based on what they know now and their assumptions about how things will play out. They're telling you these are not guarantees, and they have no obligation to update these statements if things change. They also point you to their annual report and other filings for more detail. At the end of the day, OG Energy is making a strong play to expand its power generation capacity with these new natural gas turbines. The fact that they secured pre-approval from the OCE is a significant step and shows they have a clear path forward for this project. The massive capital expenditure plan, totaling over $7 billion, underlines their commitment to growth and infrastructure development. Their strategy seems to be focused on strengthening their existing distribution and transmission networks, while also adding new, reliable power generation. The emphasis on generation reliability and generation capacity projects shows they are actively managing their power supply to meet current and future demand. The target for earnings per S-hair growth also indicates a focus on profitability and shareholder returns. One notable risk, as mentioned, is the OCC not approving construction work in progress for these new plants. This means OG will have to fund construction without immediately recovering those costs from customers, which could impact short-term cash flow. Also, while natural gas is seen as a bridge fuel, depending heavily on it, as they are doing here, carries long term environmental considerations and potential future regulatory shifts that could affect profitability down the line. Overall, OG Energy appears to be strategically positioning itself for anticipated growth in its service territory. The significant investments signal confidence in future demand. The key will be executing these large-scale projects efficiently and navigating the evolving energy landscape. Alright, that is our breakdown of OG Energy's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think building new gas plants is the right move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.